My name is Catherine Purcell, and I'm presenting to you today a company analysis of Procter & Gamble. The first thing that I'd like to present to you is my SWOT analysis. This is the strengths, weaknesses, opportunities, and threats that Procter & Gamble has. The strengths that I discussed were the fact that they have non-cyclical products. And what that means is that no matter what the economy is doing, people will need to purchase these products. And that's not just specifically Procter & Gamble products, but just household products, cleaning products, health and beauty products overall. I also believe that the depth and width of their product line is a strength. They have many different products at many different price points, and that enables them to reach many different target markets. They also spend a large portion of their budget on research and development, which makes them one of the largest innovators in the industry. They also have some weaknesses. Some of their weaknesses include a lack of online media presence. I was looking online, and their Facebook pages don't really have a lot of information on them. And I think that they could probably grow that side of their marketing strategy so that way they could get more consumers to purchase their products. I also think that targeting only women is a weakness because of the fact that more and more men are becoming the more domestic, and they are in charge of the cleaning and the shopping just as much as women are, especially with dual incomes. So I think that Procter & Gamble needs to start focusing on men just a little bit more. And I also think that even though the depth and width of their product line is great, that they do have too many products. They've spread themselves just a little bit too thin. And I think that they should probably streamline their company just a little bit more so that way they can focus on the products that are actually making them money. Some of the opportunities that I found for Procter & Gamble includes products that are made specifically for men, whether that be cleaning products that men find to be handy or useful, or going to body products that are geared just towards men. I also think that there's a growth in the middle class of emerging markets like India and China. And I think that Procter & Gamble could definitely tap into these markets more than they have. Currently, Procter & Gamble is only receiving about 30% of their profits each year from developing markets, and I think that it's an untapped area that Procter & Gamble could expand into. I also think that they could continue to expand their green and eco-friendly products. More and more people are becoming concerned with the environment and the effects that we have on the environment, and so I feel like they should continue to create products that are environmentally friendly or use biodegradable packaging for their products. The threats that I came up with are there are many substitutes. Anymore, you can go into the store, and Walmart, for example, has their own brand, and they create their own products that go with that brand. So they can take like a Swiffer cleaning product, which would be a Procter & Gamble product, and they can turn that into their own microfiber dusting mop and list it under the Great Value brand and offer it at a lower cost. Increasing raw material cost is a threat because as raw material costs increase, so do the product materials. The products are going to end up needing to have their prices raised, and that can lead to consumers choosing these cheaper alternatives. Also, with the economy not doing as well as it has in the past, Procter & Gamble has the threat of lower consumer spending. When there are many substitutes available, the consumer can go and find their products at a cheaper cost, and they don't necessarily need to be brand specific. Next, I'd like to discuss the financial analysis that I did on this company. As far as the ratios go, the liquidity ratios show that Procter & Gamble is not necessarily doing the best that it could. Their current ratio is 0.88, which is actually below 1, which means that it's not a very good ratio to have. Their quick ratio is 0.5, which means that approximately 40% of their assets are tied up into inventory, which isn't necessarily a bad thing for Procter & Gamble because a lot of their products have a short-term shelf life. They sell a lot of smaller products like cleaning products, shampoo, body wash, those kinds of things. And so they're lower cost products. So if they have more in inventory, it doesn't necessarily mean that they don't have enough money to cover their debts. Which brings me to the financial leverage ratios. As you can see, their debt to equity ratio is 0.31, which means that Procter & Gamble is at least average for the amount of debt that they have in ratio to their competitors. And then the times interest earned ratio shows that they can cover their bills 21.58 times over. Asset management. As you can see, Procter & Gamble is pretty standard for the industry, which I found is because they actually have about a quarter of the market share percentage overall. And that is just illustrated again in their profit margin, their return on assets, and return on equities. However, you can see that shareholders are not as interested in Procter & Gamble because they don't have as good of returns as far as their price and earnings ratio and market book ratio. My recommendations for Procter & Gamble would be to increase their online media presence, streamline the business into just the best-selling products and brands, and growing the environmentally friendly and green product divisions. I hope that you've learned just a little bit about Procter & Gamble. Thank you for watching.